Ladies and gentlemen, welcome to the ultimate financial showdown. We're about to witness the rise, fall, and meteoric growth of the world's largest companies by market capitalization. Early stages, 1990s. Our journey begins in the mid to late 1990s when tech was starting to boom, but oil and industrial giants still ruled the markets. Companies like ExxonMobil and General Electric sat comfortably near the top, reaping the rewards of a strong global economy. Meanwhile, the seeds of the internet revolution were being planted. Microsoft emerged as the shining star of the PC era. In Asia, Toyota steadily built its global reputation for quality vehicles, while the world's biggest retailers, like Walmart, ramped up operations, inching their way into the top ranks. Dot-com era, late 1990s, early 2000s. Suddenly, the late 1990s arrived, bringing the dot-com bubble and an explosion of internet-based companies. Investors poured billions into tech startups, believing they'd found the next Microsoft. However, as we all know, the bubble burst in the early 2000s, sending many internet hopefuls crashing. But not everyone fell. Amazon, once just an online bookstore, managed to weather the storm. Jeff Bezos had a bigger vision, selling everything under the sun. Slowly but surely, Amazon climbed the market cap ladder. Meanwhile, Microsoft held on tight, maintaining its position as a software titan. Oil companies, especially ExxonMobil, still dominated, showcasing the world's continued reliance on fossil fuels. Walmart expanded aggressively, making it a constant presence among the top. And while Apple struggled, a certain return of Steve Jobs hinted at a future comeback. Could Apple reclaim its former glory? Stay tuned. Mid-2000s, tech awakens. The mid-2000s brought a seismic shift. Google, or Alphabet, as it would later be known, entered the ring with its revolutionary search engine and online advertising empire. Market caps soared as the internet became the place to do business. Meanwhile, Apple began its iPod revolution, slowly capturing consumer loyalty and investor confidence. Meta platforms, formerly Facebook, also appeared on the scene, turning social media into a massive moneymaker. By connecting billions of people worldwide, it rapidly scaled in both users and valuation. Traditional industries like banks and retailers kept pace. But the real story was the unstoppable rise of tech. Elsewhere, China introduced powerful contenders like Alibaba and Tencent, each building massive user bases in e-commerce, gaming, and social media. Their explosive growth hinted at a shift in the global economic balance. Could these Asian giants challenge the West's dominance? Late 2000s, early 2010s, financial crisis and recovery. Then came the 2008 financial crisis, shaking global markets to their core. Bank stocks plummeted, and even oil giants felt the sting of a global recession. However, tech companies showed resilience. Microsoft and Apple managed to bounce back relatively quickly. In the aftermath, Apple unveiled the iPhone and iPad, revolutionizing personal computing and skyrocketing its market cap. Google kept expanding its product lineup, Android, YouTube, Google Cloud, further boosting its valuation. Amazon, once dismissed by skeptics, saw its share price surge as online shopping became mainstream. Berkshire Hathaway, led by Warren Buffett, stayed steady with diverse investments, while Johnson & Johnson and Procter & Gamble maintained strong consumer product portfolios. In Asia, Tencent gained massive traction via WeChat and gaming, while Alibaba thrived in e-commerce. the global stage was more competitive than ever. 2010s. The tech giants take over. By the mid-2010s, the world witnessed a full-blown tech takeover. Apple surpassed the $700 billion mark, becoming the first US company to do so. Microsoft reinvented itself under new leadership, focusing on cloud services. Amazon expanded beyond retail into cloud computing, AWS streaming, and even groceries. Google restructured into Alphabet, signaling its ambitions beyond search. Social media behemoths like Facebook soared, but concerns over privacy and data usage began to surface. Oil companies like ExxonMobil and Saudi Aramco still commanded huge market caps, reminding everyone that energy remained a cornerstone of the global economy. Late 2010s, 2020, pandemic and beyond. As we approach 2020, no one foresaw the global pandemic. Suddenly, e-commerce, streaming and cloud services became essential. Amazon's valuation exploded as online shopping skyrocketed. Apple hit the $2 trillion mark, and Microsoft wasn't far behind, fueled by Azure cloud growth. Alphabet continued to expand in AI, self-driving cars, and more. Oil stocks took a hit as global travel slowed, but Saudi Aramco stayed near the top, reflecting the Middle East's oil influence. Walmart adapted with online sales, and big banks like JP Chase found ways to remain profitable in uncertain times. 2021 to 2025. The modern titans. And now we reach the 2021 to 2025 era. A time of breathtaking valuations and intense competition. Apple, Microsoft, Alphabet, Amazon, and Tesla all dance around the $1 trillion mark, sometimes crossing it multiple times. Meta platforms. Facebook faces scrutiny over data privacy, but maintains a massive user base. Nvidia rides the wave of AI and gaming, surging in market cap with its GPUs powering next-gen technology. TSMC stands tall in semiconductors, fueling the chip supply for almost every tech product on the planet. Meanwhile, Berkshire Hathaway remains a rock, symbolizing traditional investing prowess, and Tencent pushes China's tech ambitions forward. What a competition! From humble beginnings in garages and local shops to dominating the global stock markets. Still, one thing's for sure, the race for market cap dominance isn't over. The world of tech, finance, and energy will keep evolving, and new players could burst onto the scene at any moment. Who will lead the next decade? Apple, Amazon, or a startup we've never heard of yet? Stay tuned, because the future of global business is being written right now, and you won't want to miss it.